Hello everyone and welcome to our first episode of Tax Filing Services. We are thrilled to have you with us today. And in this video, we are kicking off our comprehensive discussion on the individual tax returns, focusing on the critical steps you need to take before you even calculate your income or deduction. To help us break down how the IRS view your household structure and how picking the wrong option can cost you thousands, I have US tax expert Pachiappan in the studio with us. So welcome today.
Thanks for having me. I'm really excited to dive into this. So individual tax returns can feel like a maze, but if you start with the right foundation, everything else falls into place.
That is very much true. And that foundation is what we are tackling first today. So your federal income tax filing status. A lot of taxpayers treat these checkboxes as the top of Form 1040 as just as a mindless administrative step. So is it really that big of a deal?
It is massive. Your filing status is the absolute engine of your tax return. It dictates the size of your standard deduction, determines which tax brackets apply to your income, and completely decides whether you qualify for high value tax credits or get it with strict limitations.
Okay.
Choosing the wrong status is one of the most common errors we see, and it instantly triggers IRS notices or leaves major money to the table.
Interesting. Okay. So then let's start with the absolute baseline then. How does the IRS actually determine your state? What happens if your life changed halfway through the year?
The IRS goes by a very simple rule. Your status is locked based on your legal domestic situation on the very last day of the tax year, December 31st. So if you have a single for 364 days out of the year but got legally married on 31st December, the IRS considers you are married for the entire year.
Okay, I really didn't know about that. It's basically like a New Year resolution itself. So all right, so let's look at the board. Okay, there are 5 official filing statuses. So walk us through one by one then.
Yeah, let's break down the lineup. Number 1, single.
Okay.
This is your baseline. If you're unmarried, legally divorced, or separated under a final code this year by December 31st and you don't support any dependents, you check this box. Simple, clean.
Okay.
And second, married filing jointly. If you're married, this is generally the gold standard. You combine your incomes and deductions onto one single return. The US tax code highly favors married couples. Filing together grants you the highest standard deduction and the most generous tax brackets, shielding more of your joint income and higher tax rates.
Okay. So before moving forward, what if a couple married wants to keep their money completely segregated, for example? So can they choose a married filing separately?
They can, but it comes with a massive warning label. The IRS penalizes married filing separately. Filers heavily to prevent tax manipulation. Your tax brackets compress fast, meaning you hit higher tax percentages at lower income levels. Plus, you instantly lose access to incredible credits like the child and dependent credit or the earned income tax credit.
Okay, I understood. So now what about the head of household? I mean, that sounds like a great deal if you can get it, the information.
Yeah, it is a true hidden gem of the tax code. Head of household is for unmarried individuals who are the financial backbone of the home. To qualify, you must pay more than 50% of the cost of keeping up a home for the year and live with qualifying dependent like a child or a dependent relative for more than half of the year. It gives you much more larger standard deduction than single status and significantly friendlier tax brackets.
Okay. So and the fifth one would be?
That's qualifying surviving spouse.
Okay.
It is a status built out of compassion. If a taxpayer loses their spouse, they can file a joint return in the year of death for the next 2 subsequent years. If they remain unmarried and they maintain a home for a dependent child, they can still use this status to retain the highly beneficial married filing jointly tax brackets and deductions during a tough transition period.
That makes a complete sense. So now let's pull back the curtain a bit, and when you and the team at NMG are performing a final review of a complex client return, what are the advanced strategic moves that you're looking for? So when does a married filing separately actually beat the filing jointly?
That's where the real tax strategy comes into play. One classic scenario where our team NMG will look at married filing separately very seriously is when you sign a joint return, you assume joint and several liability. That means you are 100% legally and financially responsible for everything on the return. If a client suspects their spouse isn't being transparent with their business operation or income, filing separately creates a vital legal shield.
Okay, so are there any hidden traps to watch out if a couple choose to file separately though?
Oh, absolutely. The itemized deduction trap catches people all the time. If you file separately, both spouse must choose the same deduction method. If one spouse itemized deduction, the other spouse's standard deduction automatically drops down to 0, even if they have absolutely nothing to itemize.
Okay, then it's basically an invisible tax trap itself, as you told. So what about clients who are technically still married but completely estranged or separated. So are they stuck with those harsh separate rules itself?
Not necessarily. This is a brilliant tax mechanism called the abandoned spouse rule. If a client is technically still married, but their spouse has not lived in home for the last 6 months of the tax year, and the client is the one supporting their dependent child, the IRS allows them to file as head of household. A single shift unlocks better brackets, higher standard deduction, and saves them thousands.
Okay, so let's say we have analyzed the return at the NMG. So the perfect status is chosen and it's submitted. So what does the processing side look like? How long does it take the IRS to acknowledge it?
So if you e-file through a professional firm like NMG, the IRS system usually process and validate the data within 24 to 48 hours. From there, clients can jump onto the official IRS Where is my refund tool to track the return through 3 distinct stages, that is received, approved, and refund sent.
Okay, what happens if someone watches this video today and realizes, oh no, I've maybe like filed my taxes last year as single, but I totally qualified as the head of household. Are they locked in the same situation forever?
Definitely not. The IRS gives you a generous safety net. You have 3 years from the original filing deadline to correct your filing status by submitting an amended return using a form 1040X.
Okay.
If you switch to a more favorable status, they will cut you a check for the refund difference. But keeping this one major rule in mind, if you file a joint return with your spouse, the IRS generally does not allow you to switch to separate return after the April filing deadline has passed. Joint choices are permanent for the tax year once the clock runs out.
So that is actually a very incredible, crucial distinction itself that you have provided. So well, this has been an absolute masterclass. And before we let you go, what's the number one takeaway you want our NMG viewers to remember?
Never look at those filing status boxes as just automated administrative steps. They are major financial levers. Take the extra 10 minutes before filing to look at the household structure, double check the dependent rules, map out the math, and make sure you aren't leaving your hard-earned money on the table. And if you want to make sure it's done perfectly, that's exactly what our review team at NMG is here for.
And thank you all for tuning into our tax filing services. So if you found today's Q&A is helpful, hit that like button, subscribe to our channel for more expert tax breakdowns, and share this video with a colleague or a friend who's getting ready to tackle their tax paperwork. So drop a comment below if you have any questions about your specific filing situations, or reach out to our team directly. Until the next time, keep optimizing, keep strategizing, and we'll see you guys in the next video.